Hey, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. You are tuned in to Next Level Charting. Thanks very much for joining us. So today we're going to dive into trend following and three indicators that are in the TrendInvestorPro ACP plugin. We'll look at RSI Trend-Range, the direction of the simple moving average, and the StochClose indicator. So before we get into this, I just want to go over the characteristics of trend following. We all know them, ride that trend until the end, let your profits run and cut your losses. It's easier said than done, of course. But a typical trend following system, you have your indicator, you buy when it signals an uptrend, and you sell when it signals a downtrend until that trend reverses. That little asterisk means you can also have some sort of trailing stop loss if you would like. Typically, you get a 40% win rate. And if you're trading stocks, it's important to have a bull market filter, and I'll touch on that next. So the Bollinger Band breakout is a typical trend following kind of strategy. Here I've got Bollinger Bands 125.1. That middle line is the 125-day moving average. The upper band is one standard deviation above, and the lower band is one standard deviation below. And so when you break above that upper band, that's your trend following buy signal, and you ride that trend until you break below the lower band. But you can see the downside of trend following strategies is, if you had a break below this lower band, you would make a profit, but you would give up quite a bit of that profit if you had to wait for a break below the lower band. So that's why sometimes it's good to put in some sort of a trailing stop, but not too tight. But the idea here is just to show you an example of a trend following indicator, and we'll look at some typical metrics if you're running that strategy. So let's see what the results would look like if you ran a typical strategy using that Bollinger Band breakout I just showed you. We'll do it on stocks in the S&P 500. We'll run it from January 2000 to August 2020. Simple 25 positions, equal weight, no commissions, and we're going to also add a bull market filter. And that means we want the S&P 500, the 5-day moving average, to be above the 200-day moving average. And this is important for drawdowns. And if two stocks have signals and we don't have enough positions, we'll use the 125-day rate of change as a tie break. So we'll look at some metrics. Now, these backtest results that I ran using Amy Broker software, I'm not using dividends. Okay, this is without dividends. And if you had bought the SPY, S&P 500 SPDR, and held it from January 2000 to August 2020, your compound annual return would be just 4%. So not very good. Dividends would have helped that. You'd gotten to about 6%. If you ran the Bollinger Band strategy without dividends, you would have gotten a 7% compound annual return, and that would be a little bit higher if you include dividends. But the maximum drawdown is key here, and that's why that bull market filter helps. The SPY, if you had bought and held that, you would have had a 55% drawdown. And actually, you would have had two 50% drawdowns. One in 2002, 2003, the bear market after the dot-com bubble, the financial crisis in 2008, and then, of course, you would have had the March crash in 2020. Whereas the Bollinger Band strategy with that trend filter to keep you from taking new positions when the S&P 500 turns down, your maximum drawdown would have been a lot better at 23%. Now, this is not to advocate the system. It's a very basic system, but the reason we run these back tests is to give us an idea of what to expect going forward. Past performance does not guarantee future performance, but it serves as a pretty good guideline for setting expectations. So let's look at some other metrics, the nitty-gritty. You would have had 970 trades using that Bollinger Band breakout strategy. You had 376 winners, about 39%, and 594 losers, 61%. So that's generally the way trend following works. 40% winners, 60% losers. This is without dividends, probably be a little better if you include dividends. I'm going to test without dividends. That's the way it should be, I think. But here's where trend following excels. All right, you had 226 gains between 0 and 20%, 23% of trades. You had 574 losses between 0 and 20%, 59%. But then you look at the outsized gains versus the outside losses. And this is where you make your money. You catch a few good trends. You don't know which of those signals is going to generate that NVIDIA or Netflix or Apple trade, but you're going to catch a few of those when you're running some sort of trend following system. So 151 of the gains were greater than 20%. That's 15.5%. Only 19 of the losses were 8%. That's 2%. And that's where trend following gets its edge. But it ain't easy. So now let's look at some of these trend following indicators that are part of the ACP plugin for TrendInvestorPro. First of all, on the right-hand side, if you click that plugin link there, you can see the plugins that are available. And I've already installed the TrendInvestorPro plugin. It's $49 if you're interested in installing that. And then over on the left-hand side, you'll see your indicators. And if you scroll down, if you've installed it, there you can see all the TrendInvestorPro indicators for the plugin. And I basically have three groups. I've got trend, I've got mean reversion, and I've got volatility. And I think those three things are key to trading. So here's an example of the three we're going to talk about today. The moving average trend is the moving average trending up or down. The StochClose, 125 days. The moving average trend is also 125 days. I try to get these to be in the 3 to 6 month time frame because I think that is a sweet spot for trend following. Now I've got RSI trend range, but RSI is set at 65 days. That's 3 months because after study, it turns out that RSI is a little bit less sensitive than some of these other indicators, and so you can use a shorter time frame than say 125 days. I think that would be too much. So that's why I've selected 65 days for RSI, but I'm going to explain these in more detail. But there you can see Netflix there. And, you know, the green, of course, is when the uptrend is there. And you can see these two indicators were green. RSI trend range dipped into the red, but back into the green. So you're going to get whipsaws. But let's look at these in detail one by one. So the first indicator is the RSI trend range. And what I'm doing here is I'm taking a 65 period RSI. Over on the left, you can see the settings there. I'm going to click that little settings icon. So you choose your number of periods for RSI. 65 covers that 3 to 6 month sweet spot that I like. I smooth it with a 5 period moving average. Take out the jagged edges in RSI. I've got an upper reference for my buy signal above 50 at 51, a lower reference for my sell signal at 49. And so you can see that the indicator turns green when you're above 51, you're on a buy signal. And then when you go below 49, it turns red on a sell signal until you get above 51. And then it stays on that buy signal. So it's easy to see if it's on a buy or a sell signal. So here's the indicator in more detail with the buy and sell lines there. But, you know, I could put the signal line right there in the middle at 50, but you're going to get more whipsaws because this 50 area is kind of a battle zone. And so that's why I put the signal line and move above 51. That's the bullish threshold. And the move below 49 is the bearish threshold. And with all trend following indicators, you're going to have whipsaws, as you saw. You know, you only have 40% winners, so 60% are losers. But you can see here we had a break up and then a pullback into that battle zone and then a surge in the price there. And now we've had a pullback into the battle zone. And so that's why I'm watching closely. And if we get another move above 51, I think that's going to be bullish here for American Tower. And you can see it's right at the 200-day there. So I think it's coming into a support zone as well, and I'd watch for a breakout there. Next up, we have the moving average trend indicator. You can see up in the left-hand side. I've put it in there, and if I click on that settings button, I can see it's set at 125 days, and it's a simple moving average, my preference, and the rate of change is 5 periods. So I'm looking for when the rate of change turns up. And then I've got an upper reference at 0.3, which is 3%, and a lower reference at minus 0.3, which is minus 3%. And that kind of acts as the bullish and bearish threshold. Instead of using that 0 line in RSI, instead of using that 50 line for crosses, set your bullish threshold a little above, your bearish threshold a little below, and you're going to reduce whipsaws a lot. And so if we look here, we can see that, it turned negative, but it didn't get below minus 3% until December there. And, you got this bounce after that, but you didn't get above plus 3%, and then you got the big decline. And so here we can see the moving average turning up pretty sharply, and you got the move above 3%. And so we're not going to take the bait on this move below 0, and we stayed above minus 3%, and it looks like we're turning up again for VeriSign. And if you do a little bit of subjective drawing, you can see that, maybe you have a big advance, a correction, and you're breaking out again to continue higher. So this is the moving average trend, I call it, which is the direction or rate of change of a moving average. The next one is the StochClose, and this is the stochastic oscillator based on closing prices only. If you go back and you look at August 2015, even March 2020, you can see a number of spike lows, and that creates noise and volatility in the indicators. And so I prefer to use the closing price. RSI uses the closing price, MACD uses the closing price. And so this is the 125-day stochastic oscillator based on the closing price. And so I've smoothed the stochastic close indicator with a 5-period moving average. I've got a bullish signal on a move above 60 and a bearish signal on a move below 40. And if you don't understand what the stochastic oscillator tells you, go look in the chart school and you can read that article for details. And I like to use this indicator for ETFs because I think it kind of works as a volatility adjusted trend indicator because it takes out the volatility, whereas RSI has a little bit of momentum into it. Rate of change, of course, has momentum, but StochClose is like a volatility adjusted indicator. And so if we look at the signals here for software IGV, you can see it stayed bullish until you had this bearish signal there in late September, early October. But that ended up being a correction, but you still got a bullish signal to catch this ride. And you got a bearish signal that was late, and that's going to happen. You're going to get late signals sometimes. But then we got a really good signal here in late April and are riding that trend right now in IGV. So if you go to the Support Center and StockCharts ACP and plugins, you can find an article explaining these indicators. We'll put a link in below on the YouTube video. And also next week, I will cover the trend composite, which aggregates signals in 5 different trend following indicators. So take a look at that if you're interested. Also, if you're interested in trend following and strategies, especially with ETFs and breadth models, check out TrendInvestorPro.com. Thanks a lot for tuning in and have a great day.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.